there will eventually be no Bitcoin available for dollars. In this video, I want to talk to you about how Bitcoin's price is determined and why I think that eventually there will be no Bitcoin on exchanges and you won't be able to buy Bitcoin anymore. Let's get started. I'm going to start with how Bitcoin's price is determined. What makes it so that Bitcoin's price is at a certain level, and what makes it so that over time the price goes up and down? What you see here is an example of an order book. This is data that I found on a random order book on Google. Keep in mind that this isn't entirely accurate. I don't know how this would change in the short term, in the long term. Doesn't really matter. The point here is that this will show you how sellers set their prices and what happens to the market when Bitcoin is taken out of the market at a certain price. So you can see here, right now, Bitcoin's price is at about $112,000. So you can see here that sellers are available and they're selling Bitcoin at these prices. So $112,000, there's 45 Bitcoin available. $112,100, there's 247 Bitcoin available, and so on. So you can see as you scroll down, the amount of Bitcoin available at certain prices eventually starts decreasing. So you can see here $113,500. There's 253 Bitcoin available. So if somebody wanted to go into the market and buy 2,489 Bitcoin, how would they do it? They would first buy the 45 available at 112,000. Then they would buy the 247 available at 112,100. Then they would buy 221 available at 112,200. But keep in mind that it takes time to move prices to these levels. So if somebody were to just put a one-time order of 2,500 Bitcoin into the market and they were to buy all of the Bitcoin available up until that amount of Bitcoin is fulfilled, they would get their Bitcoin order fulfilled, but they wouldn't get it all at one price. They would have to go through all of these levels in order to get the Bitcoin that they want. But what would happen here is if the price shoots up very quickly, it'll come back down because more sellers will just come into the market and they'll replace the sellers that had their sell orders fulfilled. So any orders that they had on the market to sell a certain amount of Bitcoin, they were fulfilled. Now, because the price is higher, there are more sellers that come into the market who are willing to sell their Bitcoin at that price. And then what that does is it again fills up that order book and it brings the price lower, because when the price spikes, you have to think about it from the perspective of the buyer as well. The buyer may not want to pay that amount. So some buyers step out of the market and they don't want to buy that Bitcoin. So temporarily, big buyers can push the price up, and they can push it up and they can push it up because as you go higher, you can see here the amount of Bitcoin available is decreasing. So in the beginning, at the top, at $112,100, there's 250 Bitcoin available. And this is just a snapshot. This is just a snapshot of one time. As you go higher and higher, at certain levels, there's more Bitcoin available. So 113,500, it's a rounded off to the $500 level. There are 253 Bitcoin available. Let's go to 114,000. There's 56 Bitcoin available. 114,400, there's 50 Bitcoin available. 115,000, there's 18 Bitcoin available in this example. So if somebody wanted to go in and buy 3,191 Bitcoin in one shot, that's a big purchase. They would pay up to $115,000 to fulfill their order if they wanted to get it done ASAP. So if they wanted to do it right away. But that's not how big investors work. That's not what they do. Big investors don't unload their clip all at once. So they have, let's say, $100 million. They're not going to buy $100 million worth of Bitcoin today. They're going to buy a million here, then 2 million there, then 3.5 million here, and then another million, and then another 2.5 million. They're going to scatter their buys over time so that the market doesn't react in a way that makes the price go up too quickly. So, for example, if somebody buys this 45 Bitcoin, they fulfill their order, the price will temporarily jump to, let's say, 112,100. But then more sellers would come into the market to sell Bitcoin again at 112,000 until the sellers at 112,000 don't run out. The price will keep coming to this level. So over time, you'll keep seeing the price come back to 112,000 until the people who are willing to sell at $112,000 run out. Eventually, nobody will be willing to sell at $112,000. Just like today, nobody's willing to sell their Bitcoin at a cent. Nobody's willing to sell at 10 cents, 20 cents, 50 cents, a dollar, $1,000. Nobody's even willing to sell their Bitcoin at $100,000, as you can see from the markets, because there's enough demand available to fulfill orders at $112,000. So why would they sell lower when they don't really need to? Over time, the price goes up because, like I said, the sellers at a certain level run out. And as the sellers run out, the price goes to a higher level. And that's what we see with the Bitcoin chart. We see that with Bitcoin's price constantly. For example, you can see here, this is trading view. Ignore the lines that I put there. I'm just trying to learn, trying to see how technical analysis works. But what you see here is that over time, Bitcoin keeps running out at certain prices. So you can see here that the price ran up to a certain level and then it came back down. But then it never came back to the levels from here. So you can see here, Bitcoin sold at $2,000. It never came back down to $2,000. It did run up after hitting $2,000. So it hit $2,000 as a bottom, then it ran up. This is because markets experience euphoria. People think that the price is going to go up forever, and then eventually the market starts dumping. So they think that the price will keep going up, it'll keep going up, it'll keep going up. This is at least how traditional markets work when there's more retail investors. Retail investors pump the price up very, very high because they take on leverage, they take on debt, they buy at the margin and they keep buying and they keep buying. I experienced this when we had the weed stock craze. So people were buying the stock weed at crazy prices and crazy valuations. So you could see here how high it went at one point. It went all the way up to $756. I think this is after a reverse stock split. So I think at the time it was probably around $150. Maybe it had a 1-for-5 reverse stock split. But what you see here is this is euphoria. This is people thinking that this stock is going to go up forever. And eventually it stops going up because the buyers run out. With traditional stocks, you don't see stocks going up like crazy and then dropping like crazy and then going up like crazy and then dropping like crazy. You don't see that multiple times because a lot of the value that I think is associated with traditional stocks is people's euphoria. And it just stays there because the traditional markets are basically a bubble that can never be popped. You have the US government borrowing as much money as it can. And what this does is it makes it so that the markets are not free. The markets will continue to go up forever. If you take a look at the chart for the S&P 500, we'll go SPX and we'll see what it looks like. Over time, it just goes up. It's just going to keep going up. These markets can't handle an 80, 90, 95% drop because they're not real. If they have an 80 to 90% drop, it would probably mean that people have lost trust in the US dollar. It would mean that they're never going to come back to the US dollar. On the other hand, Bitcoin experiences those drops regularly. And the reason for that is that Bitcoin is a true free market. You can see here, Bitcoin's price dropped something like 80% from here to here, 75 or so percent from here to here. And at some point, maybe it'll drop again. But I think that would only happen after retail starts putting as much money into Bitcoin as possible. Right now, I don't think that we're having that kind of blow off top because you can see the growth over time. It seems very controlled. It goes up and then it moves sideways for a bit. So right now you see this price going up, but it's controlled because there's a lot of supply that's available to be bought. So more supply gets added to the market. So for a short period of time, Bitcoin's price cools off and then it starts going up again. Then it cools off, then it goes up again. Then it cools off, then it goes up again. And who knows, maybe at some point we will see a blow off top or we just see another 80% drop. And either way, that's perfectly fine because Bitcoin can handle it. If Bitcoin's price were to drop 80, 85% and it goes all the way down to $25,000, I would do whatever I can to buy as much Bitcoin as possible. And I know that there are other investors who are willing to do the exact same thing. The people who understand Bitcoin are waiting for a dip. They're waiting for Bitcoin's price to fall so that they can put as much money into it as they can. This chart here shows you how much money is in money market funds. So in the US, there's something called a money market fund, which is basically a fund that buys short-term bonds and it pays you interest. So in this case, maybe you're going to get 3, 4, 5%. What you're seeing here is that over time, more and more money is going into money market funds. More and more money is being parked in these funds because people want to avoid risk. If Bitcoin's price were to go down, I think that some of this money will be moved from these money market funds, and you have $7.3 trillion in these funds. I think some of it will be moved into Bitcoin, and you're not going to see it dip as much as we've seen it dip in the past. So Bitcoin's price is determined by buyers and sellers. It will remain at the current price until the Bitcoin at that level runs out. At some point, you may see that there are whales who sell thousands of Bitcoin into the market, and in the past, they would have made a huge difference to Bitcoin's market cap and to the price and to what's available. But now I think things have changed. So on this order book, you see that the market can pretty much immediately fund up to 3,144 Bitcoin worth of sales. And what I mean by immediately is that the person who is selling that Bitcoin, they can bring the price all the way down to $110,000 because temporarily there's more sellers available than buyers at the current price. So if the seller only wanted to sell 4.632 Bitcoin, they could sell it for $112,300. But if they wanted to sell a little bit more than that, let's say they wanted to sell 196 Bitcoin, they would bring the price down to $112,200. So what you see here is that at certain points, the price of Bitcoin is just moving sideways, and it moves sideways, and there's a battle between the buyers and the sellers. There isn't enough of a difference between the number of buyers and sellers in the short term to make a difference, but then you see that at certain points there are just spikes in price. And then the price never comes back down to those levels where it moved sideways for so long. These levels where Bitcoin's price is, it's called consolidating. Wherever Bitcoin's price is consolidating, those are usually levels where Bitcoin's price has been before. So, for example, we can see here from March of 2024 all the way until November of 2024, Bitcoin's price was moving between $72,000 and $50,000. And it just kept going up, coming down, going up, coming down. And we can see here that these levels were where Bitcoin's price topped last time. So people who maybe bought here, and maybe there was a lot of people who bought, they wanted to sell, maybe they wanted to get rid of their Bitcoin, but there were enough buyers to fulfill the amount of Bitcoin that came into the market. On the other hand, you can see back here, Bitcoin's price went up, it ran up very quickly, and then it came down and it went way lower than where it did this time. So last time it hit 70,000, it came all the way down to 15,000. This time, when it hit 70,000, it came all the way down to 50,000. At this point, the only reason why I went this low is because there were something like 50,000 Bitcoin sold in one shot by Germany, or I think it was Germany or another country. Somebody's corrected me in my comments before, so I don't know exactly which country it was, but they sold something like 50,000 Bitcoin, and it brought the price all the way down to $50,000. But then it never came back down to that level because the people who sell their Bitcoin, they can't sell it again. They can't just keep selling their Bitcoin over and over again. On the other hand, in the legacy markets, the stock market is completely manipulated. You have companies like BlackRock who have $10 trillion worth of assets under management. They can just sell whenever they want to, and they can buy whenever they want to. They can keep bringing the price down whenever they want to. They can control the market completely. They can't manufacture drops and growth like this because they would completely lose control of the market. On the other hand, Bitcoin is built on a foundation of people who will buy no matter what. They buy every single day, and they have orders to buy at any time when Bitcoin's price falls. A lot of people have limit orders set at, let's say, $110,000 or $100,000. I guarantee you that if Bitcoin's price goes to $100,000, there's going to be a massive fight to buy as much of it as people can. Maybe it will. I mean, I wouldn't be surprised because it is a serious psychological level. I wouldn't be surprised if that happens at some point. But whenever it does hit that level, I guarantee you that there's going to be a crazy amount of sideways movement, maybe for months, or even I wouldn't be surprised if it's up until a year. Let's say $100,000 is the bottom of the next bear market. Maybe it never goes below, or maybe temporarily it goes under it, and then eventually it'll go back past $100,000, and then it'll never go back down to $100,000 again. Because Bitcoin has a truly finite supply, you know for a fact that this will keep going up. It'll keep going up forever because the demand for Bitcoin can never be fulfilled. There's an unlimited amount of US dollars that can go into the market, an unlimited amount of every fiat that can go into Bitcoin, but the supply is finite. The number of people who are willing to sell for fiat are finite. Eventually, the people who are buying Bitcoin will never sell their Bitcoin for fiat. That's why you see that the price keeps moving up and down. There are a lot of people in the market who don't quite understand what they have, or they just want to cash out for whatever reason. Maybe they want to see the market collapse a little bit. Maybe they want to have control. At some point, they're going to sell a certain amount of Bitcoin, and all of it's going to be eaten up by massive players, and they'll never get that Bitcoin back. There are people who are trying to play around with the markets. This is how markets are made, though. People with different intentions. Some people want to trade for the short term, other people want to hold forever. Over time, the reason why Bitcoin's price keeps going up is because more and more people buy Bitcoin and then they never sell it again. More and more people are buying as much as they can. They're buying fractions. They're buying small fractions of Bitcoin. All of that is what's creating this massive growth and these 80, 90% years. And then once those people who maybe don't understand Bitcoin, they see it crashing, they start selling, and price keeps coming down, and people keep feeling like Bitcoin's price is going to go down to zero, and they keep selling and they keep selling until eventually they run out of Bitcoin and Bitcoin's price reverses again. And now I want to address a comment that I received on one of my videos. You can see here something that I don't understand. Institutions are buying OTC. OTC means over the counter, navigating past the exchange, which is totally cool, and it's the beauty of Bitcoin. But doesn't this mess with the price? If you could explain the whole situation, that would be great. What that comment means is that the bigger buyers and sellers aren't buying and selling from the exchanges, and they're not. They're using something called an over the counter desk in order to buy and sell Bitcoin. What this means is that they're buying directly from other sellers. So let's say, for example, you have an OG who has 100,000 Bitcoin to sell. What they're going to do is they're going to go to this OTC desk and they're going to tell them to find buyers at whatever price the current price is. If that seller were to go to a regular exchange like Binance or Coinbase and they were just to do a market sell for all of the Bitcoin that they have, they would get a lot less money than they would if they trade over the counter. And what I mean by over the counter here is they go to an exchange that's specifically meant to deal with massive transactions. They cut down the spread that they charge. So let's say, for example, if a normal exchange might charge 1.5%, the OTC exchange might charge 0.5%. Coinbase might have a lot of buyers available at any time, but the quantity of Bitcoin that they're willing to buy may be a lot smaller. But the OTC desk deals with bigger quantities of Bitcoin. So if somebody wants to buy 100,000 Bitcoin and somebody else wants to sell 100,000 Bitcoin, then that OTC desk will find those buyers and sellers and they'll connect them and they'll take a small fee and they'll make sure that the sellers don't have to deal with the massive losses that come with just selling your Bitcoin at the market. And same thing with the buyers. So the buyers will get a better price and the sellers will also get a better price. And I did the quick math here just to show you what exactly this transaction would look like. So let's say, for example, we have a buyer who wants to buy 4,113 Bitcoin. If they were to go through a regular exchange, it would cost them $470 million to get 4,113 Bitcoin. That's because you can see here that the amounts that they pay are based on the prices at that time. So let's say, for example, they wanted to buy 3,951 Bitcoin. They would have paid $4,590,400. For the marginal Bitcoin after that, they'd have to pay a little bit more. So if they wanted to buy 28 more, they'd have to pay $100 more per Bitcoin. And then if they wanted to buy another 5.96 more, they'd have to pay $121,000 per Bitcoin. And over time, the price keeps rising and rising until their order is fulfilled. On the other hand, if they had bought all 4,113 Bitcoin at the current price, they would have only paid $461,889. I know I'm probably missing some details here. I don't have experience in the OTC markets, but this is the idea here. The idea here is to make sure that you're not overpaying for your Bitcoin. You're not paying an extra $10 million for nothing. Instead, you can just buy more Bitcoin with that money. And the exact same thing applies to sellers. So you can see here, they are selling to buyers. If somebody just did a market order for 6,197 Bitcoin and they dragged the price all the way down to $102,000, they would get $686 million. But if they waited and they went through a OTC exchange and they found a buyer who's willing to pay the market price for the entire stack, they would get an additional $9 million. So the idea here is that the buyers and sellers want as much money out of their transaction as possible. Sometimes there are buyers and sellers who just want to mess with the markets and they just want chaos. that's when you see the price spike. And you can see that here, the price went from $19,000 in December 2020 all the way up to $64,800 in April of 2021. It went up 3 times in 4 months, and that's not realistic. Bitcoin's price isn't going to go up that quickly and then stay there. It's eventually going to come down. And that's why we see that crash from, you can see here, $69,000 all the way down to $15,000, because the real price of Bitcoin was probably set somewhere here, maybe somewhere here, maybe somewhere here. And that's exactly where we dropped, because in that period, the market had time to digest that Bitcoin's price should be much higher. And it did go higher, but eventually it came back lower. And there were enough buyers who wanted to own Bitcoin that supported the price and they brought it back up. So if a company like MicroStrategy or BlackRock went and they bought as much Bitcoin as they could on the market and they fulfilled all of their orders all at once, you would see the price spike, but at some point it would come back down, because let's say, for example, the holders of IBIT, the BlackRock Bitcoin ETF, may want to sell because the price has appreciated. So you'd see BlackRock selling as much Bitcoin as they buy in pretty short periods of time. So it wouldn't really make a difference to the market. It would give you a temporary high, but then you'd see a low and you'd feel depressed again. I don't think that OTC markets make a real difference in the Bitcoin market and the Bitcoin price, because every time you'd see MicroStrategy buying as much as they can, you'd see some other seller stepping in and selling Bitcoin and bringing it right back to where MicroStrategy started buying. So if OTC desks didn't exist, I don't really think it would make a difference to the market, because the price would go up and it would come down. It would just go up and come down. It would be a lot more volatile than it is today, but I think the price movements would be about the same over time. At the end of the day, there are only 21 million Bitcoin. Somebody can't sell Bitcoin that they don't have, no matter which desk they go through. If they go through an exchange, if they go through an OTC desk, eventually the sellers will run out and you'll see the price go up, but it may not happen as quickly as maybe you want it to. Bitcoin is not a get rich quick scheme. You have to be patient. You have to buy Bitcoin and just hold, and you have to go through the volatility. If you don't want to go through the volatility, you can sell when you think Bitcoin's price has topped, but at some point you're going to see that whatever price you sold at, Bitcoin's price ran out at that price, and you're never going to see it go back to that price again. I don't think that we're going to see the same 80% drawdowns that we saw before, unless, let's say, some corporate entity were to collapse. Bitcoin's market has matured a lot from where it was a few years ago, and I think the volatility and the price movements reflect this. Instead of seeing these same blow off tops where Bitcoin's price rose 1,000% in a year, then fell 80% the following year, maybe we'll see cycles that are a little bit shorter where the price goes up 50%, then it drops 20%, then it goes up 50%, then it drops 20%. A little bit more controlled, a lot less volatile, but the growth is still there. At the end of the day, it doesn't matter how much Bitcoin is being traded on the OTC desks. As long as you have Bitcoin, you're putting it in self-custody, I think you're going to be set for a very long time into the future. Just make sure that you don't make emotional decisions when it comes to your Bitcoin. Don't sell because you think it's going a lot lower, because at some point, whatever price you're selling at will be a rounding error. There will be a point at some time in the future when there's no Bitcoin on exchanges, because all of the people who own it know that they don't want dollars for their Bitcoin anymore. Keep in mind that this could take a few years, it could take a few decades to happen. It's not going to happen overnight, because the US dollar is so deeply ingrained in society and people are completely brainwashed to believe that the US dollar is worth something, even though it can be printed. Just stack as much Bitcoin as you can at any price. It doesn't really matter what the price is, because eventually the US dollar will be worth a lot less than what it's worth today in terms of Bitcoin.